So why hasn't cheaper money translated into affordability for some buyers?
This really has been the paradox of 2025. We have seen rates come down 3 times, which has increased the average borrowing power for a dual income household by about $74,000. But what that has done is it has improved confidence and it's brought more buyers to market. And that has translated into stronger rates of price growth. And when we look across the combined capitals, we've seen house prices over 2025. We're expecting them to end the year by about $100,000 higher over the year and about $50,000 for unit prices. Much bigger gains in Sydney. Sydney house prices we're expecting to close the year $150,000 higher, well outrunning that borrowing power.
Your report is essentially a snapshot of the 2025 property market. What kind of properties or suburbs were people looking to buy this year?
So what we definitely saw is it was those kind of blue chip location suburbs that people were really honing in on, and particularly so in the inner west of Sydney, but also some of those elite suburbs of Melbourne, so areas like Toorak. And in terms of some of the things that people were searching for, lifestyle is really always front of mind for Australian buyers. And we see that coming out in terms that people are searching for. So it is things like pool, it's waterfront, it's view. But one of the interesting dynamics that also came through this year was the rise of the word granny flat, but also dual duplex, dual occupancy, which really speaks to the thread of people trying to find more affordable options.
In your report, it says affordable capital cities are now gone. What do you mean by that?
We've seen such a change in affordability, and we used to view Adelaide, Perth, and somewhat Brisbane as those more affordable capital cities. That is no longer the case. We now have Brisbane as the second most expensive capital city to purchase either a house or a unit. We've also seen Adelaide join the $1 million median house price, and we're expecting Perth to achieve this before Christmas. So it's very hard to define a housing market that has $1 million median house price as affordable. And most of these capital cities, with house prices in particular, people are spending more than 30% of their income to cover those mortgage costs. So I think stretched affordability is definitely a key across our major housing markets.
Yeah, regardless, investors are flooding back into the property market. So according to your report, investor lending now makes up over 40% of new loans. How much pressure is that putting on first home buyers?
This is the quandary. So when you do see property prices rise, it does bring back investors into the housing market. And you tend to find that investors go for similar priced properties as first home buyers. So they're almost directly competing. And the other concerning aspect around investment activity, it's being very much steered towards established housing. What we really need to do with investment activity is steer it towards new supply. We have a supply issue in Australia. We haven't built enough homes. And when you look at lending for investors, 4 in 5 of them are going to the established housing market, which ultimately means that they're competing directly with first home buyers. What we would like to see is that demand really being steered towards new supply to really help drive that new supply pipeline.
Nicola, for Australians watching right now who feel completely priced out, is there any genuine pathway back into home ownership in the new year?
We have seen the expansion of the home guarantee scheme and help to buy as well, which is that shared equity scheme. So there are lots of schemes out there for first home buyers. I think what our forecasts, though, are showing is we are expecting further price growth into 2026. And our expectations are for a stronger first half of the year relative to a second half of the year. And I think that stronger first half is really reflective of the momentum carrying over from this year, from the reduction in the cash rate, but also from first home buyers. We are going to see a wave of first home buyers coming into the market as a result of the expansion of the home guarantee scheme. I think once we get to the second half of next year, we're really going to start to see affordability slowing down the pace of price growth.